Okay, so check this out. Bitcoin has recently experienced 4 straight green candles on its monthly chart. And historically, when that happens, we've never seen new lows again, which means it's time to let go of your inner bear and awaken your sleeping bull, because I'm calling it now that the bear market is over. But I realize that 4 green candles by itself is not enough to convince some of y'all. So in this video, I'm gonna share my 7 strongest reasons for why the bear market is over. And I'd love for you to tell me if any of them are convincing to you. Anyways, in just a minute, I'm gonna reveal my updated investment strategy in light of the bear market being over. But first, let's start with my reason 1, which is the charts. So if we zoom out a bit, we see that this recent bear market has been one of the longest in history, clocking in at 490 days. That's way longer than the bear markets of 2019 and 2015, which lasted 204 and 386 days respectively. This could be why some of y'all are finding it hard to shake off your bearish bias. And I get it, but if we stick to the facts, we see that Bitcoin has quietly climbed over 75% this year. It started off at a low of 16K in January, surged to 25K, and then retraced. Then it went from 20K to 31K, and then retraced once again. This price action looks quite healthy to me, and it's definitely more sustainable than if we rocketed from 16 to 31K with no pullbacks or time for consolidation. But that's not all, because we've also arguably experienced capitulation already. This is super important because we need capitulation to happen before any bear market can be considered over. If you don't know, capitulation just means giving up. And in our case, it means the weak hands have finally sold their last coins, so the bottom is in and the market can start to recover. For Bitcoin, we saw it drop 75% from its all-time highs during this bear market. And if we compare that to previous top to bottom drawdowns, we see that it's quite similar. So that gives me more confidence that price-based capitulation is complete. But hold up, because did you know that there's also a second type of capitulation that's equally important called time-based capitulation? That's when the market goes sideways for a super long time, causing short-term investors to sell their coins to the long-term believers. This is a long and boring process, but it basically forms a new equilibrium between buyers and sellers. The coins basically get gobbled up by the diamond hand holders who won't sell. So that creates a supply shortage, and even a tiny bit of buying pressure in the future will start to move the price up significantly. Anyways, all we need to do to see that this time-based capitulation has taken place is to look at the charts and zoom out. You see, we've been ranging for months now between 20 to 30K, and everyone on crypto Twitter is talking about how they're bored to death. So yeah, with 4 consecutive monthly green candles and with both types of capitulation in, I think the charts are clearly telling us that the bear market is over. But if the charts don't convince you, then I think my reason 2 might. And that's the fact that the bad news does not affect the markets that much anymore. Have you noticed that in the past few months, any bad news barely makes a dent in the crypto markets? This phenomenon started back in March when Silicon Valley Bank collapsed and the crypto markets barely budged. And even more recently, with Curve Finance getting exploited and threatening to liquidate all of DeFi, prices have still largely held steady across the board. So the markets are shrugging off these FUD events as if they're nothing. Whereas if you remember back in 2022, any tiny bit of FUD and it'd be like minus 15% across the board. Now, if you're wondering why we're able to shake off FUD so easily these days, well, one explanation could be my reason 3, which is that all types of investors are buying right now. I mean, just look at this chart. The whales, the sharks, and the guppies are all scooping up as much Bitcoin as possible, and any small dip in price is seen as a buying opportunity. I want to stress that it's not just BlackRock or MicroStrategy buying. Accumulation is coming from all parts of the crypto space. And check this out, on-chain data shows heightened activity from older addresses. These are your veteran holders who've been in the space for several years now, and usually when we see them start to get more active, massive bull runs have quickly followed. But if you're still not sold by that argument, then my reason 4 will definitely change your mind, and I'd actually be quite surprised if it didn't. But before we get there, if you're already feeling super bullish and are itching to smash it all in, then hold up, because that may not be the smartest thing to do. Instead, here's something for you to consider: trading bots, which can optimize your returns while minimizing your risk. And a great trading bot platform to consider is 3 Commas, who's also the sponsor of our video. So after the bear market is over and before the bull market begins, there's usually a long period of sideways accumulation. During those times, 3Comma's grid bots are amazing for automatically running a buy low and sell high strategy to turn a steady profit. But then when we get closer to full-on bull market, their hodl bot is perfect for just periodically buying and holding for the long haul. They also have so many other bots which are extremely customizable for whatever strategy you want. If you're a beginner, there are presets you can follow, so you don't have to design some complicated strategy yourself. Basically, no matter what type of investor you are or whatever market condition we're in, 3Commas has a bot for everyone. So if you want to try them out, you can get their pro plan for free for a week. And if you decide to pay afterwards, you can get up to 60% off by using my link below. Just FYI, this offer is only active for 2 weeks after this video goes live, so you gotta use it quickly if you want to. Anyways, back to reason 4, which is that institutional capital is about to flood into the space like never before. I mean, the biggest financial institutions in the world, BlackRock, Fidelity, and Invesco, are all rushing into the space, filing spot Bitcoin ETFs left and right. And this time, an approval looks way more likely than ever before. If you're curious about why, then just watch this video right here. Anyways, my point here is that all of them entering will unleash a tsunami of capital into the crypto space. Some estimates put it at $200 billion that will fill into Bitcoin ETFs alone. And think about the strength of that narrative too, that the institutions are coming and we better get in before them or else we'll lose a generational buying opportunity. That's a strong narrative if I've ever seen one, and I think it could single-handedly kick off the next bull market. But you know something else? The majority of ETF approvals will likely come in the spring of 2024, which would align wonderfully with the next Bitcoin halving, creating the perfect setup for BTC to rocket next year. Anyways, while I am excited for the institutions to join our party, I gotta tip my hat off and thank Ripple for their recent victory, because that's my reason 5 for why this bear market is over. Their recent partial victory actually got me feeling more bullish than I felt any time in the past 2 years. And it's not just me though, I think it really flipped the switch in everyone's brains. The market rallied hard when the court decision was announced, as a lot of people who were on the sidelines aped into the markets afterwards. Judge Torres' decision ruled that XRP itself was not a security, and that their secondary sales on exchanges were likely not securities transactions either. So all the SEC lawsuits versus Coinbase, Binance, and other crypto projects started to look a lot weaker than before. And while the case could always get appealed by the SEC, it does put pressure on Congress to move faster to get some bills passed rather than just sit on their hands and let the SEC regulate through enforcement. So yeah, whether the Ripple win stands or we get an expedited bill by Congress, it's a massive win for the industry either way. Now, my 6th reason to think that the bear market is over is that the backbone of the crypto ecosystem has turned bullish. That'd be the miners, by the way. And boy, are they bullish. Hash rate has hit new all-time highs for the Bitcoin network, which means that miners are deploying more devices, and they're doing so in a profitable manner. It's not only that though, many mining companies are feeling bullish and putting their money where their mouth is. Big mining firm Hut 8 is holding over 9,100 Bitcoins, and their CEO says that they, quote, remain bullish on Bitcoin and are hodling. I'm not surprised by that at all, given that miners have made more money in the first part of 2023 than they did in all of 2022. So with all these big time miners turning bullish, maybe, just maybe, we should as well. By the way, I don't know if you've noticed, but all my reasons up to this point have been specific to the crypto markets. But I think that misses the forest for the trees, because a big reason why crypto dropped in the first place was because of broader macroeconomic concerns, which affects the whole economy, not just crypto, right? Like, yes, crypto did get battered, but so did high-flying tech companies, which saw many of their stocks drop 90% or more from their all-time highs. So all that's to say that perhaps the biggest reason that our bear market is over is my reason 7, that the macro environment has recovered and is looking way better than before. The Fed is no longer forecasting a recession, and they even think that inflation could return to normal levels without us having to reach high levels of unemployment. So perhaps the soft landing that everyone was doubting could actually come true. Either way, the Fed has slowed down the rate hikes lately, and it looks like the end of rate hikes could come sooner rather than later. And that's why I think things look brighter from the macro front. And that's a big reason to believe that the bear market is over. Alright, it should be crystal clear by now that I'm so bullish it's not even funny. But the important part here is that I've changed my investment strategy because of this. Personally, I'm aggressively dollar cost averaging into long-term BTC and ETH positions, trying to stack as much as I possibly can. I'm also looking to put a smaller percentage of my portfolio into swing trades for early altcoin gems. I'm talking about ones with market caps under 100 million currently. I'll be looking into niches which I believe will do well in this upcoming bull run, such as liquid staking, layer 2s, and derivatives. But an important part of my strategy here is to not diversify too much. I don't want to have more than 5 to 10 coins at any given time because I want to keep things easier to manage and go heavier into the ones that I have more conviction for. But I think the most important part of my strategy is to remember that the early bull market can still be quite volatile. Check this out. During the 2020 run-up, we saw a massive 50% crash that lasted a few weeks. So my point is, something like that could happen again, even if the lows are already in. And we should position ourselves accordingly to not get wrecked if something like that happens. But yeah, there's actually a lot more to my plan and strategy than just these few tips. So if you want to learn my full bull market strategy, then you have to watch this video right here.